A very good evening and welcome to The Bottom Line, a wrap of some of your top business news stories of the day. My name is Nzinga Kunta and we begin as usual with your number of the day. Today, that number is 700 billion rand. That, according to President Cyril Ramaphosa, is the amount that the Infrastructure Fund will spend investing in South Africa over the next 10 years. He announced this in his State of the Nation address yesterday, that the Infrastructure Fund implementation team has finalized a list of, and I quote, shovel-ready projects and has begun work to expand private investment into public infrastructure sectors with revenue streams. So that team has a project pipeline with potential investments of over 700 billion rand over the next decade, including both government and non-government contributions. Those projects are set to include student housing, municipal bulk infrastructure and electricity generation. This investment is one of the ways that the government hopes to grow South Africa's ailing economy, which is projected to grow by the Reserve Bank at 1.2% in 2020. So let's get some more reaction on the State of the Nation address and the economic points that were raised in that. I'm joined by Carolyn Weil. She's a financial market analyst. Thanks so much for your time on SABC News. So what's the business and market reaction to that State of the Nation address by President Cyril Ramaphosa yesterday?
Well, thank you for having me this evening. I think after much disruption and 90 minutes of a lot of disruption from the EFF, the president was able to deliver his State of the Nation address, and I think he touched on all the kind of pressing issues that is facing South Africa at the moment. And the market reaction today was quite positive, so we saw the rand outperform many of its emerging market peers as the markets digested President Ramaphosa's speech. So, I mean, there are a couple of takeaways from the speech, and obviously there was a big focus on Eskom, given the risk that poses to the country at present, as well as youth unemployment, which is, of course, a crucial issue to South Africa at the moment.
He also spoke about public finances and the need to reduce how much is spent as well as reduce debt. Yeah.
So, I mean, I think, the medium-term budget speech was a bit of a wake-up call for South Africa. The picture was pretty bleak. Debt to GDP numbers are expected to increase to more than 70% in the coming years. So there was definitely a need for Ramaphosa to address the fiscal situation in South Africa. And there's no doubt that government is in a very tight spot. Revenue collection is dwindling. We've got a shrinking tax base, and on the other hand, expenditure remains very elevated. So there's very little room to maneuver. And that's why it was quite positive that he did mention that there may be expenditure cuts on the card, and that there may also be a change in the composition of that expenditure. So if we can divert expenditure away from things like a public sector wage bill towards things like infrastructure, that would definitely be viewed positively. But definitely the current fiscal trajectory is unsustainable, and hopefully we'll get more insight into the way in which the government plans to address this at the budget later this month.
So given the position, the economic position of South Africa and that fiscal trajectory that you've spoken about, some were quite surprised by the announcement of a sovereign wealth fund. Yeah. My question would be, can we even afford this?
Yeah, so I think there is quite a bit of skepticism around our ability to afford a sovereign wealth fund. Typically sovereign wealth funds are utilized by countries who have excess reserves. So they use the sovereign wealth fund as a vehicle to invest those excess reserves. And often those countries have budget surpluses, as well as they're rich in mineral resources, whether it be oil or any other natural resources. So, given the fact that we're running a twin deficit, so a current account deficit as well as a budget deficit, it is really a question of where is that money going to come from, and then also what will the objectives of that sovereign wealth fund be. And then, of course, governance is also a major issue. If a sovereign wealth fund is created, how will that money be managed, and can we avoid some of the issues that we've had in the past with managing our finances.
The issue of energy generation and Eskom also came up. That has been one of the things that has been spoken about by Moody's as as something that's a risk and that could lead to us being downgraded. What would the reaction be to what President Cyril Ramaphosa said last night about the possibilities of energy generation and independent power producers as well?
So, I mean, that is one of the kind of key takeaways from last night's address, and one of the most positive things to come out of it. I think crowding in the private sector to enhance their participation in the energy generation sector is an extremely positive thing. It would allow us to diversify our exposure away from Eskom, and also mitigate the effects of load shedding. You know, we've seen the impact that load shedding has had on the economy in the last couple of months. The data, you know, speaks for itself. So if we can mitigate the impact of load shedding, get more investment in the country, and relieve some pressure on the national grid, that would be extremely beneficial for the economy and definitely a step in the right direction. So for markets, that's a really good indication, and we'll wait to obviously hear more detail about that too at the budget.
Let's speak about this infrastructure fund and that number that I spoke about a little bit earlier on, 700 billion rand to be spent over the next 10 years. Give us some insight into what could possibly be done regarding this, and whether this is going to also grow our economy at a larger rate than we are currently seeing now. Yeah,
so you know, as I mentioned, from an expenditure perspective, we already have a very limited room to maneuver. So one of the things that Ramaphosa did mention last night was the potential of, you know, reducing our expenditure. And also changing the composition of that expenditure. So if that means, as I said, diverting funds away from things like line items such as the public sector wage bill towards infrastructure, that would be, you know, that would assist in growing the economy. You know, one of the ways in which the government has kind of pushed out the expenditure and managed to keep a low on expenditure is by not keeping, is a lack of maintenance upkeep. So if that money can be also used to maintain the current infrastructure as well as build on the existing infrastructure, that would be, you know, viewed as positive for their economy and viewed positively by markets. But there wasn't a lot of insight into what that infrastructure fund is going to look like. So we'll obviously wait once again for the budget to see what that looks like.
Carolyn Weil, thanks so much for your time on SABC
you.
News this evening. A financial markets analyst at a CFA joining me in studio there to get some reaction on President Cyril Ramaphosa's State of the Nation address.